So the 18% move is nice, but we do have to remember it was down high single digits in today's trading session. I think the story in the fourth quarter is different from the second and third quarter to the extent that the high margin businesses, cloud computing and advertising, were able to offset a slowdown in e-commerce, and that the company's e-commerce business in the fourth quarter had a better than expected handle on some of the challenges, supply chain, labor, things of that nature. So very impressive profitability in the fourth quarter, and at least for one quarter in the last three, advertising and AWS were able to offset the challenges at e-commerce.
How do they deal typically with the pricing issue around Prime? They're going from $119 a year to $139 a year, citing a rise in inflation, basically, costs related to wages and transportation, as well as expansion of benefits under the membership. How does that typically go for customers? Do they automatically renew?
So I do think that they have a large base of customers that automatically renew. My flippant answer was that they're basically passing on the cost of Lord of the Rings to consumers, not unlike the cable companies do with regional sports. But in all seriousness, they're very thoughtful with raising the price of Prime. I think it's been 4 years since they did it last time. And they do have, Prime today is very different than it was 4 years ago. The amount they've been spending on video is multiples higher, and the quality of the service, when you think of one-day shipping and things of that nature, is much better than it was the last time they raised price on Prime.
So, Tom, tell us what you're most focused on in the earnings call.
So the primary focus in my mind is on the e-commerce front. Were they able to manage the labor expectations, supply chain, things of that nature? Because if you think about the March quarter versus the December quarter, while you've seen from Apple a sequential improvement in supply chain, things are still challenging. The labor market is still very tight. So I'm curious to find out at the e-commerce level, how are they managing supply chain? How are they managing labor challenges?
Online sales were actually down, but to your point, AWS up 40% certainly helps. What about the advertising business? Now that they're breaking it out, $10 billion, that they saw more than 30% growth there in light of some of the concerns around Facebook. How does that look?
So in my mind, breaking out advertising services reminds me of when they first broke out cloud computing. It's essentially Amazon saying, hey, we're taking this very seriously, and look how big the business is, and look how fast it's growing. So I think investors, in addition to being encouraged by the better than expected results, are favorably reacting to the increase in Prime, and also that they're now disclosing specifically their very impressive advertising sales.
Tom, where does this stack up of the mega cap names in your preferences?
Well, clearly right now, I think Apple is the cleanest story to the extent that they are performing at the highest level. Their stock has done very well. For Amazon, I am encouraged that they were able to offset the challenges at the e-commerce level with higher margin AWS and also cloud computing. Obviously, Netflix has challenges. Facebook, Meta, whatever you want to call it, challenges. And Google is probably performing as well as Apple is. So put Apple and Facebook, or Apple and Google at the top, and then Amazon afterwards.